Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Wednesday, August the 13th. I'm starting off with Angle, where it looks as though we've got a decent resumption of the early 2014 rally for the shares, which rather disappointingly ended with the decline from around a pound back towards the 70 pence level. It looks like we've shaken that off now after a W-shaped reversal, higher support above 70 pence for July and August. And the big breakthrough on Tuesday was the way that the low of the day was above the 200-day moving average at 83 pence, and also support coming in yesterday around the old June 84 pence peak as well. So the view now is that while there's no end of day close back below the 200-day line, we could head quite quickly towards the top of a rising December trend channel as high as £1.10 by the end of September. Any weakness in the interim back towards the 200-day line without the end of day close back below it to cool off the overbought RSI at 82 would be welcome, but it does look as though the breakout here is quite serious. And next up is Oilex, where it looks as though we also have a new phase of bullishness, key reversal to the upside yesterday, support coming in above the 50-day moving average and the floor of a rising trend channel from April, just below 8 pence. That's also the level of the 50-day moving average as well. Double bounce off the RSI support line there at the 50 level, which is also a plus point. So it should be the case that at least while we're above yesterday's floor at 8.35 pence, the shares head up towards the implied 14 pence target, and probably the way things are going, much more given the way the new support has come in well above former resistance under 8 pence. Moving along to everyone's favourite stock, one way or the other, and that's Quindell. Suspicion was or is that we've got a falling wedge formation, which is a bullish formation here. A couple of bounces off that since the beginning of July. The last low was a sort of like a sort of selling climax there, just below 140, and we've sort of edged up quite well ever since. Key reversal to the upside yesterday for Tuesday. And all it needs now really is an end of day close above the 10-day moving average and May resistance line at £1, roughly £1.80, really to do the trick in terms of giving us a decent buy signal. If you're fussy and you really want to see the shares sort of try and confirm that they are out of the bear sort of area, then you'd wait for an end of day close above the 50-day moving average, but that would possibly be giving away too much of any initial upside here, especially as we've already come up from £1.38 over just a few sessions. RSI break at 50, the neutral 50 level would be useful as well, but the RSI was actually the first indication with the latest bounce off the line here from June, was the first indication that the shares were back on the mend, or could be back on the mend. And obviously, as we know from falling wedge formations, if they are as they normally are, one would see a pretty decent reaction to the upside over the next few weeks. At this stage, only really back below £1.60 on an end of day close would now delay the recovery scenario. Finishing off with Valirx, rather difficult to pronounce, but here we have the shares looking as though they want to break higher. We had the initial push through the 200-day moving average, currently at 0.34 pence. Last month, we then tested the 200-day line as new support with a little bear trap below that level at the beginning of August, and now we've got the decent end of day close back above both in July and initial August resistance at the 0.42 level. The view now is that one would be looking for any dips towards the 0.4 level roughly as buying opportunities. It may be that the top of channel here, the Y channel that I've drawn here from October, is a bit too wide, and we're actually looking for, rather than 1 pence as a target, maybe closer to 0.6 or 0.7 pence. But either way, the message here at the moment is it looks as though we've got a decent breakout. The shares have been backed by a rising RSI uptrend line from April, with a double rebound off that to start August. So that's also a decent positive for the stock. And really, this stage only really back below 0.4 pence, perhaps on a weekly close basis, would really suggest that this is another false dawn for the stock in much the way that we had in October and the beginning of last year. That's it from me. More updates on spreadbetmagazine.com.